Good afternoon. Time to have a look at the markets. Stocks right now, and that is global stocks, that is little unchanged at this particular point as investors brace for more hefty hikes from central banks in order to deal with inflation. But we look at what's happening with the dollar near a 2-decade high versus its major peers. Oil prices little unchanged as well. Brent currently trading at $91.94 a barrel. When we look at what's happening in Europe, it's the higher bond yields reaching multi-year highs on concerns of elevated energy prices that have investors on that side concerned. However, we are expecting the Fed to increase interest rates tomorrow when it ends its 2-day meeting. And then we also have the Bank of England having their interest rate decision on Thursday. Markets are expecting the Bank of England to move a lot more aggressively, more than they did in August when they had a 50 basis point increase. Markets now changing the tone, saying perhaps 75 basis points might be warranted, because if they don't, given what is happening around the Bank of England, or at least around the UK, with the ECB moving at 75 basis points, the Bank of England could be seen as irresolute. So it may make sense to perhaps look at an increase at around 75 basis points. But we'll give you all of that analysis later on during the week. As we look at the Rand right now, currently trading at 17.71, near its lowest since 2020. But to give us a little bit more perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, you look at the past few trading sessions that we've had on the JSE, it's been themed, or rather characterized by losses, at least 5 days worth of losses, that is. How are we looking up right now?
Not too bad, and good afternoon to you and to the viewers. As doing the opposite what is happening with our international peers, we managed to be up 0.6%, and we've been helped mainly by our platinum stocks, your RMM, the likes of your Sibanye, but also our banks helping out there. But generally, I think the whole mode is that the markets will start to be going down very soon, because we continue to be very cautious. And remember, we also tend to benefit from the rand hedges. As we see the rand continue to weaken, then our rand hedges gets to benefit out of that. But it's got nothing to do with the fundamentals of those companies or the fundamentals of our economy.
Speaking of the Rand, I mean, what do you make of its performance in the lead up to that Fed announcement, or rather interest rate decision, as well as the SAB on Thursday?
I guess it was expected. Remember, the U.S. economy, as much as we expect global economies to go down, we expect the U.S. economy to do better than other economies. We expect the U.S. economy, as we've seen, that they continue to lead the pack when it comes to increasing interest rates aggressively. So that interest rate differential continues to be there. Yes, we've seen the likes of the Swedish bank also surprising us, giving us a 1% increase. Markets didn't expect that. But generally, we expect aggressive interest rate hikes that side and a better economy that side, even though it might be slowing down. So hence, we've seen that the past few weeks, the US dollar has been strengthening. And also with this whole thing of the bond yield, of the bonds selling off, that as a result made the bond yields going up. And we know of that inverse relationship. And the rand itself, given that it's very sensitive to commodity prices, now later our commodity prices have not been doing well. That also had an impact on our rand. And not forgetting that Eskom itself is not helping the situation.
You're looking at the Fed here, where market participants are expecting at least interest rates to rise longer, and they might actually see more bigger moves. And at the same time, other central banks having to have their own fights against inflation. What do all of these moves mean for liquidity in the market?
We have to acknowledge that, listen, most of the global trade and finance is done in the US dollar. And we know any fluctuation coming from that side is going to have an impact on other currencies. And also we know that the market at some point, or the Fed at some point, it has to pause. Remember, you have to stand and wait and check to see any impact when it comes to all these interest rate increases that we've been doing. Nastasia, remember that if we continue to have a very strong dollar, that is not working when it comes to the US exports, because they make that uncompetitive. And also we know that a stronger dollar is giving other central bankers inflation headaches, as it makes things very expensive for them. So this is not looking okay. just for the US itself, because the stronger dollar, as I said, is impacting their exports, and also is giving headaches to other central bankers, because basically with a stronger dollar, we're basically importing inflation into our shores.
Do you think, I mean, at this point, we could see ourselves retesting those June lows, given the fact that markets are fighting seasonality? September is generally a weak month for equities. We've got an aggressive Fed. We've got weak global macroeconomic views.
You know, what has been happening, this bond yields going up, basically what they've done, they've changed the calculus when it comes to stocks. And also, what we need to see is that, yes, we've factored in or priced in that interest rates are going up. The most important thing that we'll be looking for is the tone, how hawkish their remarks are, because that can exacerbate the situation or at least give the markets some reprieve. So more importantly now is their remarks, how hawkish those remarks are. But as I said, the calculus for the stocks have changed since we've seen bond yields going up.
Is there anything signaling hope for you right now?
Not really. You know, I just hope that we don't even get China and Taiwan issue gets to get out of control. Because look at us now. We've just factored in this whole thing of Russia, Ukraine, that war. So, and here we've got this tension which is gradually boiling, you know, between the US and China about Taiwan. I hope it doesn't get out of control.
Before I let you go, we haven't spoken about U.S. tech stocks in a very long time. Do you look at them recently? I mean, what do you make of their performance? Any concerns?
Just going down, you know, because remember, those companies, they managed to raise money in a cheaper way when interest rates were low. So when interest rates go up, unfortunately, it makes the repayments more expensive for them. Hence, when you look at those three major indices, when the markets start going down, then NASDAQ gets the one that gets to be hammered more than the other ones. So basically, it's not looking okay as well. And also this issue about the regulations, you know, in other countries, others having to get penalties, and also China's trying to strengthen their markets when it comes to the tech sector. So yeah, generally they're not just looking okay. I think if we didn't make good money out of them 2 years or 18 months back, I don't think this is the right time to think about making good money out of them.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers.